Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Eastup Jr.
Hello and welcome back to the Ask Ralph Show. If you listened to our last session, we talked about renter's insurance, and I had promised to talk about homeowner's insurance as well. Now, as I said before, I am not an insurance agent and I'm not an insurance expert, so I just wanted to take a few minutes to give you some basic overviews of homeowner's insurance. If you missed our last session, you can go back and listen to that. If you're a renter, we did one on renter's insurance. And our next session that we're planning is going to be on an umbrella policy. So let's dive right into this homeowner's policy and let's talk about number one, why do you need homeowner's insurance? And the most obvious thing is to protect your assets. And that's homeowner's insurance covers the structure of your home and your personal property, as well as your personal legal responsibility, or what we call liability, for injuries to others or their property while they're on your property. The other big part of this, why you need, and I mentioned this in my renter's review, is that to satisfy your mortgage lender. Most mortgage lenders require you to have insurance as long as you have a mortgage and to list them as the mortgagee on the policy. If you let your insurance lapse, your mortgage lender will likely have your home insured. Now, what I'll tell you, having been involved in this from the lender perspective, you do not want them to do what's called forced place insurance, where they add insurance to your loan, to your loan, and they collect that money from you. It is outrageously expensive, but it is not in your best interest, so they don't really care. So what happens is when you get an insurance policy, most lenders require you to send them a copy of that where you're listing them as the mortgagee, so that if there is a structure fire, there's some sort of vandalism or destruction to the home, they would be aware of that. At the same time, if you drop your insurance, or if your insurance lapses because of non-payment, your insurance company is probably going to notify your lender, and you're going to get a letter that says, hey, you need to take care of this, and don't put this in the basket and set it aside. It needs to be handled. Now, what are the coverages in a homeowner's policy? Well, there's several. First one is the dwelling, and that pays for damage to your house and to structures attached to your house. This includes damage to fixtures such as plumbing, electrical wiring, heating, and permanently installed air conditioning systems. There's also coverage for other structures. This would be things such as fences, tool sheds, freestanding garages, guest cottages, and other structures not attached to your home. It also covers personal property, reimburses you for the value of your possessions, including furniture, electronics, appliances, and clothing damaged or lost even when they aren't on your property, such as those at an off-site storage locker or with your child at college. Most policies also cover loss of use. And what we're talking about here is it pays some of your additional living expenses while your home is being repaired. So if your home is involved in a fire and you've got to relocate because you can't live there, most homeowners policies are going to cover some sort of loss of use where they're going to pay for you to potentially rent a home or rent an apartment or stay in a hotel if it's a short period of time. It may pay for some clothing and that sort of thing. It also covers personal liability, and that covers your financial loss if you are sued and found legally responsible for injuries or damages to someone else. That's really important. It also covers medical payments, pays medical bills for people hurt on your property or hurt by your pets. Now, there are a couple of different types of homeowners policies. To be reimbursed for damage to your property, a covered peril. Now, what is a peril? That's an insurance term for a specific risk or reason for a loss. So, which perils your policy covers depends on the type of policy you buy. The most common type of homeowners policy are listed below. That's because I'm using a guide here by the National Association of Insurance Commissioners. Now, this was put out in 2010. It's a little bit dated, but I thought it was really useful information. And the type of owner's policy is called a form. The most common of which is the dwelling fire form. Covers only your dwelling. It does not cover your personal property, personal liability, or medical payments. The basic form insures your property against only the list of perils shown in the form that they give you. There's also, a broad form, a special form, a tenant's form. That's what we talked about last time with the rentals, and a condominium unit owner's form. There are also townhome policies, mobile home policies, and farm owners policies. Now, In general, the different types of homeowner policies cover the following perils: fire, smoke, windstorm, hail, lightning, explosion, vehicles and civil unrest, theft and vandalism, trees and other falling objects, weight of ice, snow, and sleet, freezing, rupturing, or sudden and accidental overflow of a plumbing, heating, air conditioner, or fire sprinkler system, or a household appliance. Now, this is a thing that a lot of people don't know about. Most policies do not cover flood. They do not cover earthquake, war, nuclear accident, and other perils specifically excluded in your policy. This is a big deal, with these floods that are going on down in the south from this hurricane. Homeowner policies don't cover flood damage. Depending upon where your home is, you may qualify for flood insurance through the National Flood Insurance Program or through a private insurer. Your mortgage company is going to let you know if you're in a floodplain. So it's something you need to be aware of. Most people don't realize this. If you're not in a floodplain and something happens and there's a flood in your home, it is generally not covered. So it's something you want to keep your eye on and make sure that you are paying attention to that. Now, when you talk about any types of insurance, there are policy limits. Typical limit of coverage for the dwelling is, whatever you choose. Now, I will tell you from practical experience that the mortgage company is going to set that number based on what your loan value is. Other structures, personal property. Now, personal property is generally limited to 50% of the dwelling coverage limit. Loss of use is generally 20% of the dwelling coverage limit, and personal liability and medical payments. All of these things are based on what you have. So one of the things, again, like I talked about in the rental policy, is take time to make an inventory of what you have. You may consider making a video, use your telephone, take pictures and keep that stuff off site so that in the event that something is stolen or vandalized or that, God forbid, there's a fire, you will have a listing of what you had in your home prior to that, what they call peril. You also want to make sure that you get a deep understanding of the difference between replacement cost and actual cash value. Replacement cost is the cost to rebuild your home or repair damages using materials of similar kind and quality. Actual cash value is the value of your home considering its age and wear and tear. Actual cash value coverage pays you for your loss, but often doesn't pay enough to fully repair or replace the damage. So you want to make sure if you're getting a policy that you're getting replacement cost. If not, they're going to get you depreciated, and I won't get into a fancy talk about accounting terms, but they're going to get you into something that's not going to rebuild your house based on the current cost to rebuild your house. So it's really important that you pay attention to this. If you're doing other types of things in your house, if you've got computers or laptops or you have an in-home daycare, you really want to talk to your insurance agent and make sure that you've got those things covered. And like I talked about with the floods, make sure that you've got flood coverage if that's what you're looking for. And in general, if you're looking for a way to save on insurance, you want to do some policy bundling, and that would be including, perhaps your homeowner's policy and your automobile policy. A lot of insurance companies will give you a discount if you use them for multiple layers of coverage. So I hope this was helpful when it comes to homeowners insurance. You certainly, if you own a home, you want to pay attention to what your coverages are and your limits, and make sure you understand the type of insurance you have based on the value of your home.
You've been listening to Ask Ralph, brought to you by Saggio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts, and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening, and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware, and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.